Google and Microsoft both reported earnings today. We're going to be taking a look at those because we know that the large tech stocks have a big effect on the market. I'm also going to be taking a look at an indicator with you guys that measures the buying power of the SPX. So we could use this as another way to see tops and bottoms in the market. So we're going to be taking a look at the SP500, the NASDAQ 100, the Russell 2000, the dollar, the VIX, the bonds, the yields. We're going to be putting everything together to get a good holistic view of the market as a whole. All right, so without further ado, let's get started with the video. All right, so number one, Google reported pretty bad earnings. Alphabet reported 11% revenue growth, and in the third quarter, as it rebounded in advertising, pushed expansion, blah, 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 blah. Basically, the main reason why their revenue dropped is because their cloud service revenue dropped. And the reason why this is important is because you generally don't want to lose money in something that doesn't really have that much infrastructure cost. So, you know, we had Google had 8.41 billion versus 8.64 billion. So their cloud service is something that they were banking on. That's something that a lot of these large tech stocks were also getting a lot of revenue from. For example, AWS and Amazon, Google's cloud revenue, and Microsoft's Azure. So that's a really big source of revenue. The fact that Google's is taking a hit is not very good. And that's the main reason why Google is currently red in the after hours. Microsoft, on the other hand, Mr. Nadella, happy guy, did well. So the earnings on Microsoft did really, really well because of their cloud service. So we could look at the numbers, you know, 2.99 a share versus 265 a share. And revenue was 56.52 billion versus 54.5 billion. But this is the main kicker here. Revenue from Azure jumped 29% during the quarter, faster than 26% consensus among the analysts at CNBC and Street Account polled. Microsoft doesn't disclose Azure revenue in dollars. Azure revenue rose 28%, accelerating from 27% in the fiscal fourth quarter. So Azure is doing really well, and OpenAI clients are doing jumped as well. So meanwhile, clients are flocking to new generative artificial intelligence tools in the cloud that are enhanced with the software from Microsoft's backed startup OpenAI. The Azure OpenAI service now has 18,000 customers, up from 11,000 in July. So it's right now, guys, a lot of the tech stocks, it's cloud technology and AI technology, and having a cloud service that is growing without like real cost of up. It's not a storefront business, right? So a storefront business, you have to pay, you know, the upkeep, you have to pay various different things. With online businesses, it can scale out infinitely because it costs less money. And what these companies don't want is the cloud service, basically the infrastructure. Large tech stocks, for example, they create the infrastructure for like these large enterprise companies. They create the infrastructure to allow other companies to build. And that's what their cloud services are. So Azure, AWS on Amazon, and the Google Cloud, they allow people, they have these services and they allow people to build on top of them. So the fact that Google's is not doing too well is the reason why it is currently red, and that's why Mr. Microsoft is very happy. So right now we can clearly see that Microsoft is up in the after hours. It's up almost $12. Google is down currently in the after hours. So this sort of indecision is not really going to help. But if anything, in my opinion, on Google, this is probably going to lead to a pretty good dip buying opportunity, seeing that Google has been a leader thus far. And this would be a interesting dip buying opportunity, similar to when Nvidia dropped, in my opinion. So back when Nvidia dropped over here in August, and then again in September, these were both pretty good. Specifically over here, when Nvidia dropped in August, that was a pretty good dip buying opportunity. Let's see if that coincides on Google. It looks like we might open outside of the lower level of the Bollinger Bands, which would indicate that it's overextended to the downside, which should give room for a bounce. So that's going to be pretty interesting. But regardless, you know, Microsoft and Google did their thing. Now all eyes are going to be on Meta reporting earnings tomorrow, and then Amazon reporting earnings on Thursday. So at the moment, you know, Amazon, so we could just go down the list of all the large tech stocks first. So let's start off with Apple. Apple is still doing its thing, holding 172 until we break back above 176.50. This is still not really the most bearish. This is not really the most bullish setup. We're not seeing any strength here, right? This is clearly, we're not seeing any strength, but we are seeing support being held and lower, like higher lows. So this is pragmatically something that we have to take a look at. If we end up breaking above 174.50 and closing, when we make another pullback, we can make another higher low. So Apple looks pretty interesting. It's slowly chugging along, in my opinion. Tesla, obviously we had that bounce 3 days outside of the lower level of the Bollinger Bands, obviously leads to a bounce back within the Bollinger Bands. So, you know, I'm expecting some more strength out of Tesla. I'm expecting Tesla to hold 215 tomorrow, especially 214, and then continuing up. I'd be surprised if it just breaks and makes another low. But yeah, Tesla should be bullish tomorrow, in my opinion. Nvidia did pretty well. We need it to break back above 440. AMD, not as strong as Nvidia, but you know, still holding support, and needs to basically break above 102 and making higher lows. So the tech stocks as a whole, they're doing pretty well. But just the indecision between Google and Microsoft. Had Google also been green, NASDAQ would be doing really, really well. But Microsoft is going to be pretty interesting now to see how this can start to trade. So yeah, it depends on where we open and close on Microsoft, but it definitely looks like we're going to be trading outside of the upper Bollinger Bands by the time we open. So I'm excited to see how this turns out, to be honest. And yeah, with that being said, now I think we could go ahead and take a look at the buying power of the S&P 500. All right, so this is stockcharts.com. I basically have a chart of the S&P 500, and I got an indicator of the price of BP SPX. So BP SPX tracks the buying power of the S&P 500. So what I like to do with this is I look at this as if it's an RSI. So I look at things that are above the 70 and below the 30. So with this indicator, we're basically able to see where there are tops and bottoms according to the buying power. So if you take any time we're above 70 or any time we're below 30 and basically just overlay it on the chart of the SPX, we can see that, you know, for example, over here and here, this entire point was an overextension and a good opportunity to be bearish because right after that we ended up falling. And then over here in September, this entire time here was a good opportunity to be loading up on longs for a potential bounce, and that's also exactly what happened. And similar, this can literally be done everywhere. So this was a good opportunity to be bearish. This was also a good opportunity to be bearish, and you know, then eventually we just fell and obviously dropped lower, right? So now now it's important because we're back. And this is now starting to show that we're overextended to the downside. So back here, earlier this month, we were overextended to the downside out of oversold conditions on this below 30, and it bounced. So now we're back below 30 again. And yeah, that's just something to take into consideration. This is not an automatic reason to be bullish tomorrow. It's not an automatic reason that we're going to bounce within the next few days. But guys, this does have a really, really good track record of showing overextensions. So that's the best we can do, is look at different indicators that give us an edge. And this is definitely one of the indicators that do that. So this also is not perfect, but we're looking at the NYMO, the McClellan oscillator. So we know that this also has a good indication of when things become bullish and bearish based off of the flipping of these colors. So if they flip black, then it's a good time to be bullish. And if it flips red, it's a good time to be bearish. So this recently flipped black. We need to see if it can continue up, but it's a good indication that we could continue going up higher according to this indicator. All right, so now let's just go ahead and just jump straight in and look at the VIX. So the VIX is important to look at because it has an inverse relationship to the market. So if the VIX is going up, that means the market should be going down. And the VIX below 19 is bullish. Below 1750 is also bullish. So it's a good indication that the VIX is trading below 1950. All right, we had a big 2 red days on the VIX, and this basically translated into some strength out of the overall market. So this was good for bulls. We saw that we were very overextended to the upside. According to the VIX, it would have led to a pullback on the VIX, because we know that when things are trading this far outside on the Bollinger Bands, we should get a pullback. And this pullback on the VIX led to a bounce in the overall market, which is nice. Next, we can take a look at the yields. So the yields also have an inverse relationship to the market. Very, very simple. If the yields are falling, then the overall market should be rising. That's sort of what happened. It wasn't a completely clean correlation recently in the past few days, but that is also currently what's happening as well. The yields are falling, the stock market is rising. And then we could also take a look at the dollar. So the dollar, it's interesting because it's not giving as clean of price action. Usually the dollar works inversely to the market. So if the dollar is rising, if the dollar is falling, right, then the overall market should be rising. But today and over the past few days, honestly, like the dollar did not have that inverse correlation to the market. So at some points, it's not always as clean. We see that the dollar is green today. The overall market was red. The overall market was also green, so they moved in unison. So it's not always perfect. So the dollar is not really telling us much at the moment. Clearly some strength out of the dollar. If it could break above 106.50, then this is really, really strong. We could continue up rising. But this was the first instance of a pretty bullish move on the dollar. So if the dollar continues rising like this, this could end up being bearish on the market if the correlation persists. But at the moment, the dollar looks really strong. We need to see how that affects the overall market. At the moment, it's not doing so. So now let's just go ahead and look at the indices. So this is a chart of the SPY. I was saying that the NASDAQ would be leading this push to the upside because of tech stocks earnings. So the NASDAQ, you could see, was up 0.97%. The IWM was up 0.87%. And the SPY was up 0.75%. So the NASDAQ led. And what I will say is clearly, right, the momentum is still bearish. Like this is a clearly this is bearish momentum, right? But what's most important to understand is when you're going to buy and sell. Personally, I am not going to be longing anything. I'm not going to start adding to longs above 425. I want to be adding to longs down here. As we this entire area, I want to be adding into longs because it just makes the most sense to me in my opinion. If we were to make another leg down, if we hit this trend line, if we're anywhere between 414 to 417, once we get down there, it's easy to talk about this in hindsight, but I'm sure if we were to hit 414, 415 in 2 or 3 days, guys, everyone would be like, there's no way in hell we're going to bounce. Everyone is going to be very, like, the most important thing is once we get down here, right, is to think with a clear head. We cannot start to be very, very bearish after a huge move to the downside already occurs. Okay? Once we get down here, I need everyone to start thinking very pragmatically and taking a step back and looking at the charts from a bird's eye view. What happened? Okay? And if, you know, you have to just look at this, guys. If we made multiple legs lower, and every time we make a leg and come to a level of support, we bounce. Once we get down here, it's not the time to start going short. It's a better time to be going short at levels of resistance, never at support. And you know, hopefully that's my thought process. That's my thesis on the market. And if we do end up dropping below, if we do end up breaking above 425, great. You know, congratulations. But if we drop, if we remain here, because right now, guys, things can remain choppy for the next like 2 weeks. There's a lot of news still going on in early November, and there are some things that can affect the market. For example, FOMC, the Fed funds rate, various different things coming in early November. So that can cause the market to just continue chopping around down here for the next 2 weeks, and then, you know, have some sort of a move either to the upside or the downside. And yeah, so what I'm trying to say is that it's not the time, in my opinion, until like a really good setup occurs. It's not really the time to swing anything for like a week or 2 weeks. The direction isn't really there. We can have one big green day and then another red day. It's not really definitive in one direction. So if you were to buy any options, I would definitely buy them for maybe 2 months out minimum, month and a half, 2 months out. And yeah, you know, that's what I'm really expecting out of the market, to be honest. Some sort of choppiness. And once we get down to these levels of support, 414, this important 417 level, if we were to hit 411, all of these levels would be good buying opportunities. So yeah, that's basically what I'm looking at. The NASDAQ continues to show strength. It is the biggest winner over the past 2 days. And if the NASDAQ can break above the 362 level, that would be really, really strong. And yeah, that would be really strong. I'm just wary of because the only way to be very, very bullish right now is if there's a massive what I will say, regardless, right, there's a lot that could happen, can't happen, whatever. What I will say is be bullish at levels of support and be bearish at levels of resistance. We saw what happened last time. We saw how it was just easy, just bullish this entire time, and then we bounced. So we could have a repeat of that. So it's important to keep that in mind as we get down to important levels, right? So just be careful. The IWM is also not helping us at all. It's not showing any sort of strength. There's no explosive moves to the upside. It's keeping the market down. If the IWM helped in any way and ripped to the upside, the overall market would be making new highs. But the IWM is the tech stocks have to carry the IWM and the S&P at the moment, unfortunately. So that's that. To be honest, we have to just monitor what happens with how earnings report for the rest of the week. And you know, we're still oversold on the BP SPX. We're flipped bullish on the NYMO, you know, and the yields look bearish. The VIX looks bearish. The dollar doesn't look it could continue up. So let's see how the overall market responds. But I hope you guys enjoyed today's video, and please make sure to like, comment, subscribe, do all that good stuff, and I'll see you guys bright and early tomorrow morning. Thank you.